This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Russia has scrapped a Saturday deadline to resume flows via a major gas supply route to Germany, deepening Europe's difficulties in securing winter fuel, after saying it had found faults in the Nord Stream 1 pipeline during maintenance. Nord Stream 1, which runs under the Baltic Sea, had been due to resume operating at 0100 GMT on Saturday after a 3-day halt for maintenance. But Gazprom, the state-controlled firm with a monopoly on Russian gas exports via pipeline, said on Friday it could not safely restart deliveries until it had fixed an oil leak found in a vital turbine. It did not give a new time frame.
Group of 7 finance ministers agreed on Friday to impose a price cap on Russian oil aimed at slashing revenues for Moscow's war in Ukraine while keeping oil flowing to avoid price spikes. But Russia vowed to halt sales to countries imposing it. The ministers confirmed their commitment to forming a buyers' cartel after meeting virtually. They said, however, that key details, including the per-barrel level of the cap, would be determined later, based on a range of technical inputs, to be agreed by the coalition of countries implementing it. Today we confirm our joint political intention to finalize and implement a comprehensive prohibition of services which enable maritime transportation of Russian-origin crude oil and petroleum products globally, the ministers said.
Moving on to the top news in the energy sector.
OPEC Plus is likely to keep oil output quotas unchanged for October at a meeting on Monday, 3 OPEC Plus sources said. Although some sources would not rule out a production cut to bolster prices that have slid from sky-high levels hit earlier this year. The Organization of the Petroleum Exporting Countries and Allies, including Russia, known as OPEC+, meets as demand faces headwinds and supply could be boosted by returning Iranian crude if Tehran secures a deal with world powers on its nuclear work. Brent crude has dropped to about $95 a barrel from $120 in June on fears of an economic slowdown and recession in the West. Iran is expected to add 1 million barrel per day to supply or 1% of global demand if sanctions are eased.
China opened its financial and commodity markets further to foreign investors on Friday, allowing qualified overseas institutions to trade broadly domestic futures and options instruments. The move is part of the Beijing's plan to liberalize its vast capital market, the world's second largest, and to deepen China's pricing power in commodities such as crude oil and iron ore. The China Financial Futures Exchange said in a statement it allowed foreign access to stock index options. Targeted investors are those under the Qualified Foreign Institutional Investor (QFII) scheme and its yuan-denominated sibling, RQFII.
Next, we have the top news in metal markets.
Dalian iron ore fell on Friday to its weakest level in more than 5 weeks, while the steelmaking ingredient hit a contract low in Singapore, dragged down by mounting concerns about demand as top steel producer China battles fresh COVID-19 outbreaks. Widespread COVID-19 lockdowns and a property sector downturn in China, along with growing risks of a global recession as central banks hike interest rates aggressively to bring down inflation, have fueled worries about demand for metals. The most traded iron ore, for January delivery, on China's Dalian Commodity Exchange ended daytime trade 2.8% lower at 667 yuan and 50 fen, $96.70, a ton, after touching its weakest level since July 26 at 652 yuan earlier in the session.
Copper prices rebounded from their lowest in more than a month on Friday after U.S. jobs data spurred optimism that the Federal Reserve may temper its aggressive path of rate hikes. Prices had ticked lower earlier as top metals consumer China extended COVID restrictions and concerns deepened about a potential recession. Benchmark copper on the London Metal Exchange was up 0.7% at $7,648 a ton at 16:15 GMT, after earlier touching its lowest since July 27 at $7,510. We will now look at the top news in the agricultural sector. The Biden administration is expected to announce a rule this year that would detail annual biofuel blending mandates for the refining industry for a 3-year period instead of just for one. 3 sources familiar with the discussion said. The switch to a multi-year target would be aimed at providing longer-term certainty to the refining and biofuels industries, which have battled nearly constantly over the annual mandates since they began more than a decade ago under the U.S. Renewable Fuel Standard, RFS. They're trying to put together a proposal for 2023, 2024 and 2025 where once they put the proposals together, then they don't have to go back in and they don't have to change and modify the volumes, said one of the sources, who requested anonymity to speak candidly about the discussions.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.